So we're moving into section 4, common risks. What have we talked about so far? Well, a number of things, namely the definition of risk, what we understand to be broadly downside risk, which is more often than not what the SBL exam deals with. We've also talked about a possible approach, ERM and indeed COSO. Now remember that they're just possibles, but certainly they're the go-to approaches according to the ACCA. Remember that in terms of the real fine detail in relation to, let's say, the COSO framework, let's just have a feel for it. We don't need to memorize every single aspect of it, or indeed ERM either. Now, in terms of common risk, again, something that's will happen in the exam, as mentioned, is that you'll be asked to identify, let's say, the strategic risks or indeed operational risk facing the company based on the scenario that you're given or the exhibit. Two things to remember. As mentioned, firstly, we're generally talking about downside, as in negative risk. That's the first thing. The second thing, perhaps more important, is when we look down the various areas here, in other words, the different types of risk that you might come up with, they're very, very straightforward. Students tend to be worried about being able to dig out from a scenario or an exhibit what a particular, if a particular risk is relevant. I mean, just think about it in terms of, for example, legal and regulatory. We're talking about, something negative in relation to the legal side or reg side. Really, we're talking about non-compliance, and it's the same with other areas. So, key point is, don't be overly concerned with the definitions, just think downside. And I think the final point is that more often than not, the types of risks that affect companies are not dissimilar. Many companies will be faced with legal and regulatory risk. Many companies will be faced with health and safety risk. So let's walk into the exam, so to speak, forearmed and forewarned. In other words, let's have an idea of the types of risk that generally tend to impact upon most businesses, because then in one sense, notwithstanding the scenario or the exhibit in front of us, we have a feel for what we could start with at least. So let's start at the beginning here, market risk. So again, this is referred to as systematic risk. So really what we're talking about is it's just uncertainty within a given market in terms of either an asset liability or perhaps an investment. So, very, very difficult to avoid this because, let's say, we're in the market and it affects all players, okay? Most companies would be subject to market risk, I would have thought. In terms of credit risk, again, it does what it says in the tin. We're talking about some issue in terms of credit. So let's say we have two parties. There's a debt. One fails to oblige on the contract. That's credit risk. That's a financial loss to one party as a result of some sort of instrument, an invoice, a trade receivable, and basically the other party's inability to discharge that. That's credit risk, fairly straightforward. Liquidity, as we'll just see, again, quite straightforward. There are some examples within the study hub, but in essence, we're talking about cash. We're talking about being able to meet obligations, whether or not that's in the immediate term, today, this week, in the short term. We're talking about a cash issue. Let's remember that for most businesses, cash is king. Having working capital to meet commitments is absolutely key. If we can't pay our staff or our short-term commitments, trade creditors, etc., at the end of each month, we have a liquidity risk. We have a problem. In terms of technological risk, again, many companies over the years have suffered from this. We're talking about, not realizing or recognizing, if you will, changes in technology, and indeed, as a result of that, losing competitive advantage or going out of business. I mean, a good example of this might be a company like Toys R Us. Toys R Us didn't realize that Amazon were chomping at their heels. Toys R Us, if you're aware, were certainly one of the largest toy providers in the 90s. and early noughties, but didn't take advantage of the myriad of opportunities that the internet and use of the internet, e-commerce, e-business afforded to it. Underestimated it, while, as I say, Amazon were in the background chomping at the bit and did take advantage of it. So that's tech risk, any form of risk associated with technology. In terms of legal and regulatory, again, quite straightforward. I mean, every business has a responsibility to comply or to show compliance with regulations, often referred to as compliance with. You break the law, you're falling foul, penalties, etc., etc. In terms of health and safety, certainly health and safety obligations for an employer are twofold, aren't they? In other words, the employer's health and safety risk is just to make sure that they provide a safe working environment, and I think the employee's responsibility is obviously to take care, but the harm to employees is that risk. You don't provide the right environment, there is potential harm to employees. In terms of sustainability or environmental risk, we know how important, as we've said elsewhere in the course, that this area is, and indeed commonly examined. Let's have a fix on this. We're talking about some sort of damage caused, I guess, by the enterprises or organizations' activities to the environment or people. Some sort of fall in quality of life or degradation of the environment, etc., as a result of the company's operations. We can't have that. In terms of climate-related risk, again, obviously topical, some sort of impact, and TCFD, if you take a look at the hub, provides us with guidance there, a little bit over the top for me for this exam, but we're talking about, financial risk, and indeed any risk to the global economy as a result of changes in the climate. In terms of reputation risk, again, this would be one of my top priorities, absolutely. Businesses do not need problems in relation to their reputations. So any negative publicity is a no-go, particularly for listed entities, and information getting out about, things that happen within an organization can affect their reputation. In terms of derivative risk, we're talking about mechanisms, obviously, perhaps hedging mechanisms, forwards and this and that, that cause some sort of damage or financial damage to the particular players, to the board, to the company, to cash flow, to profits, etc. In terms of risk evaluation, obviously, we've talked about risk. We've talked about identifying risk, we talked about prioritizing, managing, looking at likelihood and indeed impact. When we think of evaluation, it's covered a little bit more detail in the next chapter. But really what we're trying to do is just gauge potential impact and indeed implications. I mean, this is difficult to do, it's guesswork. We have probabilities, we have our idea of potential impact, but to some extent this is guesswork, difficult to do. So do see chapter 15 on that. In terms of a process, obviously we're going to assess, identify, we're going to respond in some way based on priority, i.e. impact, likelihood, etc. We're going to employ activities, given what we see in 1 and 2. We're going to communicate across the board, not least to shareholders, internal control, back and forth. And indeed, outside of that, we must monitor and review. We don't just do it on a standalone basis, okay? In terms of risk appetites and indeed attitudes, we know that the appetite is very simply, the amount and nature that an entity is prepared to accept in pursuit of goals. Now, let's bear in mind, as I've said elsewhere, that there may well be differences within the organization. Directors could have a different appetite for good reason to, let's say, shareholders, or middle management to senior management. So let's be careful here to identify within the question. It should be signposted. Where this is examined in the SBL exam, it'll be fairly well signposted, but appetite, that word, won't necessarily be used. So we're looking at viewpoints, okay? Now, we might have, let's say, a risk seeker, happy to take on higher levels of risk if this means better rewards. The flip side, obviously, is risk averse, prefer to avoid risk wherever possible, and happy to accept a lower level return. Obviously, in between the two, we're talking about risk neutral. Okay, so what affects a stakeholder or an individual's even appetite? Well, there are quite a few different things. Things like the culture in the organization. The organization's risk capacity, which is the maximum risk it can bear, although that's very difficult to gauge. Obviously, how important a strategic, objective is. Is it extremely important? Is it life and death? That may affect our view. And indeed, outside of that, certainly not just the risk management capabilities of management, but the capabilities of management. Clearly, if we have better experience with risk management and indeed across the board, maybe we can gauge things more accurately. Maybe we can deal with downsides when they do occur. So those are the factors that affect risk appetite. And remember, just three. Outside of that, capacity, as I've just meant, the maximum amount. And this is quite difficult to gauge, so it's finger in the air type scenario. In terms of a policy, we've seen references to COSO many, many times. The risk appetite statement is really guidance in one sense for people in the organization, and this should align with, obviously, shareholders' interests. It will clearly have broad strategic parameters, in other words, parameters in a corporate sense. It's going to have financial parameters. Clearly, risk and reward are linked. And indeed, thirdly, is going to have operating parameters in some way, shape, or form. In other words, really lower level, what we do on a day-to-day, week-to-week basis. Okay, so that concludes Chapter 14, Risk Strategy and Identification. I draw your attention to the next chapter, of course, where we focus on a little more detail in other areas. I hope that you found that useful and indeed that your studies are going well. Thanks for listening.